I strongly believe in a multi-chain world. People get confused. They hear me talking about one token versus another. I like Solana and I'm very strong on Sui because I'm on the board, stuff like that. And people mistake the fact that that's what I think the future of crypto is. I'm not. I'm a mercenary for price action as well. I'm trying to make money like all of us are. We need to make money out of the space because this is one of the biggest opportunities we've ever been given. As we go from a $2 trillion asset class to a $100 trillion asset class. But I'm actually more broadly interested in the overall space, in a multi-chain world, where people are pushing boundaries and frontiers of using this technology as the new infrastructure layer of the internet.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal on the most chaotic show in macro and crypto. It's time for Raoul to follow the J. Powell rates announcement. Raoul discusses crypto, the banana zone, the everything code, lifestyle chips, and where we are today in the big picture outlook.
The ownership of goods, whether it's real-world assets or digital assets, requires blockchain technology. It's a prerequisite for where the internet is going. Also, the powers of decentralization as society starts rebelling against concentration of power, we're looking towards decentralization. And that's a classic thing that happens in societies over time. It's an ongoing process from one to the other. What is really interesting within blockchain is where we see new use cases coming. There's often a criticism of the space, which is it's bad UX, it's bad UI, there's no real use cases outside of stablecoins and other stuff. But it takes time to get people to start building on this. And I'm not talking about small startups for crypto natives. I'm talking about the big Web 2 companies. I'm talking about the finance, and I'm talking about gaming, and culture. These big things, they are coming to blockchain. And I think it's really important to explore this. Now, I'm not much of a gamer myself. I didn't really grow up with gaming culture, but my go-to person for that is Piers Kicks, who many of you know, who helped us understand what the metaverse is going to be all about. I was with Piers in Portugal recently, chatting with him over a beer, and he said, listen, there's a huge game coming called Off the Grid that may be the big breakout. And I'm like, okay. And he said, look, this is the strongest conviction I've ever had. And I said, well, what chain's it on? Because, you want to know who's doing this. He said, Avalanche. I'm like, okay, well, I'm going to get my friend John Woo to come and talk to us about it. Because, John is somebody I really, really respect and like in the space. He's always got something intelligent to say. He helps me broaden my perspectives, and they're doing great work over at Avalanche. And I think what you're showing here is also another important thing, is that the tech is not static. People kind of think because of Bitcoin that what is launched stays as is, but it's not. We're starting to see relentless upgrade cycles as new competitors come with new ideas, the benchmarks keep moving, the space improves, and you have to keep reinvesting, which is an expensive process as well, but it's going to be what separates the winners from the losers.
This week was a real belt buster on so many levels. Federal Reserve Chair Jerome Powell finally gave a portion of the market what it wanted by tossing out a 50 basis point interest rate cut. The S&P 500 hit another all-time high and gold remains in up-only mode. In response to the policy shift and other factors, Bitcoin broke out and found strength up to $64,133. Even with the long-awaited Fed policy shift confirmed, Bitcoin's day-to-day price action has yet to deviate from its 6-month norm. As mentioned in previous weeks, the Bitcoin chart shows a structurally ordered downtrend. On a higher time frame, prices making weekly lower highs and futures-driven liquidations drive the price action. Even the September 18 to September 20 move to the range highs is within the boundaries of the current 6-month range. At the time of writing, BTC price can be observed peeling back from resistance at the previous August 24 breakout high at $65,000, which also lines up with the 200-day moving average. If the weekly candle closes below this level, then the pattern of weekly lower highs is still in play. A natural outcome of a breakout like the one seen this week would be for price to retest underlying support near the 20-day moving average, $60,000 to $58,500 range, especially if traders fail to follow through on the current breakout with sustained spot volumes. During the last 6 months, spot volumes have been relatively flat, while a majority of Bitcoin's price action has been driven by futures liquidations and options market activity. On the flip side, following this week's FOMC, there has been an uptick in Bitcoin's open interest, and if traders persist in attacking the $64,000 to $66,000 zone, there is a chance of breaking through the descending channel and altering Bitcoin's higher timeframe market structure. As shown in the chart above, BTC price has been unable to push through the channel's descending trendline since April 24, and bulls would need to secure a close above $66,300 to make this a reality.
Everybody overcomplicates the space or over-financializes the space often. And I step back and think, basically, blockchains are in the business of selling block space. That's all we really do in this space. And, yes, unlike other systems like this, whether it's cloud or whether it's the internet, you can actually participate in owning it. So it's very different. But how do you think that how do we start to differentiate block space in the end when everybody's kind of fast and cheap and everything else? How does that work?
Great question. Because I think
how much room can there be for 50 block space providers? Yes, there's going to be some niche, some broad, but how do you think of block space per se?
So I'll answer that in two ways. One, a block space is not equivalent to block space. What I mean by that is that's like saying a query back in the 90s at Excite or at Lycos or at Yahoo is the same as a query on Google. There are different levels of search, just like there are different types of block space. Block space, there's a lot right now. Think of it as a pure commodity, and you're only competing on price. What Avalanche has always believed in is that there's different chains for different reasons, different purposes. So this whole upgrade, largest upgrade of the Avalanche blockchain since mainnet launch, is about creating customizable, fast, interoperable, what we call L1s, which is your own solvent blockchain, tethered to Avalanche main chain. So you can have your application on your own infrastructure and choose a purposeful blockchain based on what you need, whether it's high transaction throughput, low gas fees, higher gas fees. Some people want actually higher gas fees, or you don't want to deal with it. You want to go to market faster. You use a Vox as your token instead of launching your own token as some want to do. Or this is why we have a lot of TradFi crossovers, because you can also use a proof of authority private chain that has optionality into the public world.
Traders have also been alluding to the synchronicity of the Fed rate cut nearly aligning with the start of Q4 and the September 20 news of the United States Securities and Exchange Commission approving options on BlackRock's spot Bitcoin ETF. According to Capriole Investments founder Charles Edwards, Q3 is the worst time to be in Bitcoin. Q4 is the best. BitMEX co-founder Arthur Hayes believes the United States Federal Reserve's recent rate cut was likely politically motivated and could impact markets and inflation. Hayes shared his thoughts on the Fed's recent action, speculating it could be part of an effort to bolster support for the Democratic Party. I have a macro view that Jerome Powell, Federal Reserve Chair, and Janet Yellen, Treasury Secretary, want to use financial markets to help Kamala Harris win the election. On September 18, the Fed cut U.S. interest rates by 50 basis points in a move widely anticipated by investors and analysts. Hayes said this could have significant implications for both traditional and crypto markets and potential long-term consequences for inflation and economic stability. He pointed out a disconnect between the rate cut and current economic indicators, stating that the U.S. economy shows strong gross domestic product growth while unemployment remains low according to historical standards. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.